Well, Alec, it's an amazing pleasure to be here together. I mean, we've been friends, co-founders, and partners of Adventures through many years. And I think the idea of our conversation today, hopefully, would be to try to give the audience a feel of how we see things in the world today, what are some of the positive things that we see, and what are some of the implications and learnings that we got throughout the cycle. So, great pleasure to be here, and very happy not only to be here, but to have experienced and done so many things together.
So am I. Really cool. Guys, what we're going to be doing here is an informal Q&A. I'm going to ask questions to this gentleman, and he's going to ask questions to me, so as to make it a bit more dramatic. So, Jose, we're living in a very peculiar moment. It seems like many things have changed from what was the norm in the last 10 or 15 years. So how do you see the macro environment today?
Yeah, I mean, I think that this is the first time in my career that I can answer this with very high levels of uncertainty, because I could actually build a case of pretty much everything happening from here moving forward. Different stories, what I think will happen, and I will tell you that. But I mean, I could make an argument that a lot of the problems that we've seen in supply chain that have been motoring inflation, could be corrected, and eventually, we could come down to a scenario where there's less inflation, where interest rates are not going to go up. I don't think that's the case. I could also come up with an argument of saying, hey, tomorrow there might be a nuclear war, which frankly, I really hope it doesn't happen. I also think it's unlikely. But I also don't think that there's no probability that there's other things that can happen that could escalate strongly with what we are seeing with Ukraine and Russia. And that would certainly have, obviously, very big implications, not only from lives of people, that is more important, but from other things. Now, what I really see is, interest rates probably will go up. What happened was that there's been so much stimulus flowing into the economy throughout, COVID. And there was a lot of strain in supply chain. All of that has created, a lot of inflationary pressure. That pressure is probably going to convert into higher interest rates. And as you have higher interest rates, prices come down. I mean, companies are valued based on discounted cash flow, and if interest rates are, higher, prices will drop. And I think that we have probably a couple of years where there's going to be, a lot of uncertainty, a lot of volatility, and very likely increase of inflation that, automatically has direct implication both for venture capitalists and for founders themselves. So, I mean, I will answer back to you, giving you my opinion. But when we started the Remate, you spend a lot of time going through crises, and you've seen different type of cycles. Why you don't tell us a little bit some of the learnings that you've got from those cycles that you think could be applicable to what we're seeing today?
Yeah, when we started Remate.com, we were an eBay clone for Latin America. It was the very early days of internet. We launched in 1999, and it was a fantastic journey. We ended up selling to our main competitor, Mercado Libre, and they did their IPO, and great story. Interestingly, very near our launch in 2000 and 2001, we had maybe the biggest crisis that technology has had so far. The dot-com bubble bursting and everything that happened around that. So if I were like an entrepreneur today, I'd be thinking, okay, what does this mean, right? And I can tell you what it meant for us. And there were 42 companies trying to do what we did at that time, 42 competitors in the region. The region being Latin America, from Mexico to Chile, and everything in between. Of the 42, only 2 survived. 40 died because of the process. Mercado Libre and the Remate survived. Everybody else died. So what differentiated those 2 guys from the other 40? And I think the first one was very, very, very aggressive, adjusting to be able to endure. And by adjusting, just to share some numbers, there were 300 people in the Remate team. As a consequence of the crisis, we let go 155, so roughly 50% of the workforce. We did that in the first month of the crisis. Now, many of the other players thought, well, we should wait, maybe things get back to normal, there could be a bounce. Why be so aggressive? You know, these people are so relevant, we love everybody so much, which is, of course, all of that is true, except that the crisis lasted 6 years. And so by year 3, they were all dead. So first comment is, I would say at this point, when in doubt, go ahead. I mean, do what you think makes sense for the long run. Second, besides right sizing for the context, second big decision we made was to focus on profitability. We were like everybody else back in those days, not profitable, spending a lot of money. Well, in less than 12 months, in 10 months, we became profitable. That meant lots of creativity, enormous amounts of effort. The plan was for 3 years, so we moved a plan of 3 years into 10 months. But again, had we not done these two actions, we wouldn't be alive, and we wouldn't have been able to survive and grow and eventually sell to Mercado Libre. Another maybe comment I'd make to entrepreneurs in a similar situation today is speed. I mean, as fast as you can go is not fast enough. So don't just, you know, this is not a moment to overthink anything. It's a moment to do. 80% right is fantastic. I wouldn't be, you know, cute trying to make things perfect. Just do them and do them fast. And just to finish this question with a line of hope, what's also very important is what happened afterwards. So the immediate effect was a very aggressive downsizing and et cetera, that I just described in our experience. But what happened afterwards was, to show a couple of numbers, the tech ecosystem globally went from a couple dozen unicorns to roughly 1,000 unicorns today. So it grew. 95% of what we know as the tech environment was created after the crisis. And a lot of that was created during the crisis. So for those who actually survive, I think there's a fantastic opportunity ahead. And very relevant and important things like the mobile revolution, which happened afterwards, were not even in anybody's maps. And I might suggest that we also should consider the many other things that we're not even considering will also come up in the coming years.
So let me take advantage and jump in and give a little bit more color. I think what Alec mentioned is great feedback for entrepreneurs. And I think in times of crisis, cash becomes way more important than in times when you can go out and raise. And we are certainly in a situation where cash is becoming quite scarce. So a lot of the advice that I see in the market to companies is when this happens, try to extend your runway, which is actually what we did in the Remate. Look for additional capital. And in some cases, looking for that additional capital might not be on the ideal structure that you want, but as you prepare for winter, sometimes you have to, as an entrepreneur, you have to swallow and you have to say, listen, the value of the cash that I'm getting today is probably going to keep me alive into the future, no? As much as you can, refocus your company on what is your primary focus and try to, be more efficient with the use of cash. Don't try to build too many things. Try to prove what you are building. Try to simplify your strategy. Focus on what really matters. Look for simplicity. And then as a CEO or founder, you are going to have to, to continue to show your leadership skills, and make sure that all of your team is, aligned. And I think that's super important. And, being decisive, managing your stakeholders and making quick, and decisive decisions can be very important. And these things can make the difference between you being able to successfully navigate through the winter, and be able to come out stronger. No?
Thinking about what you were just now commenting on, winters and summers and cycles. I think one thing that might be interesting is to tell the audience very briefly about the cycles we lived in the three companies where I was co-founder and which I led. The first one was the Remate, as we mentioned. The second was OLX. OLX is a used goods trading marketplace for the emerging world, quite big in India, in Brazil, in Eastern Europe. 600 million users a month today. And the last one was Letgo. Imagine a OLX 2.0 base focused on the US and with a tactical operation in Turkey. So how did we think about those three moments, the Remate, OLX, and Letgo? I mean, the Remate was Web 1.0. I mean, just like eBay and AOL, actually, the very early players, Amazon. OLX was Web 2.0, so it's advertising based. It's more on the Facebook type of that era. And Letgo was a mobile app only, so part of the mobile first or mobile only era. These three cycles, one after the other, I think, were very defined, and being able to identify them early on and become a player there was probably the main reason for our success. Yeah, of course, we executed, did all kinds of things after that, but the truth is, timing was essential. We did the Remate, we were the first to do that. We were the first to do the OLX type of thing, and also we were early in Letgo. Speed there, absolutely key, and trying to be a pioneer, I think, paid. If I think forward, I fast forward, say, what is then the next cycle? No? And I think to think about the future, it's good to look at the whole movie as opposed to just a picture, very briefly. So we went from computers being the center of what was happening in technology, to software and the internet, to mobile, to now, and now I'm going to talk about now in a second. Everybody had a PC at the beginning, but they were not very connected. Then with the internet, everybody got connected. And then with mobile, everybody got connected 24/7. Each step implied a massive step change in generation of data. And I think the next cycle is data, everything around data. If you think of it, we spent until now developing software that will be able to produce good data, because we would use the data that the software produces to take decisions, etc., etc. The next cycle, it is data that will allow for the best software to be developed. It's the reverse. The core becomes the data, not the software. And just to share a couple of interesting data points, the GDP of the world, when we're talking about the hardware world, that was $7 trillion. When we started talking about the software world today, that's $84 trillion, so from roughly 12 times or something like that. Going forward, depending on how you do the arithmetic, but I like one forecast which says it's going to be 10 times, $840 trillion by 2062. Because this is the data world and everything goes up, and it just makes a lot of sense. If I were to be thinking about what to launch, what to focus on, what to be an entrepreneur on today, these are the kinds of things I would be focusing on. Because it's, riding a wave that's going up is a lot easier than trying to go against the current. No? And that's what we did with the Remate, OLX, and Letgo.
I mean, I think that we need to understand that not everything is bad, and that despite the fact that the market is contracting, this is probably one of the best moments in cycles to be able to start new companies. And I'll tell you after why I think that it's also a great moment for investing. But, it is harder to raise capital, but you have way less competition. And definitely, I believe that we are at a moment where opportunities for entrepreneurship will continue and will remain. And I think We might get mixed messages from, from the world, but if we think about it, the evolution that we've had has been very positive. No, I mean, keep in mind that in 1820, people life expectancy was 29 years. Today is 72. The world literacy rate was 12%. Today is 86%. So there's a number of factors that show that despite some of the cycles where things get not that beautiful, at the end we come out stronger. And I think we as entrepreneurs and investors should remain optimistic on the transformational value that that technology can have in the impact and life of society. And Alec, you also moved from where you were before, to building a SPAC. So tell us why that and what's the opportunity, because obviously the SPAC area right now has been a bit, a bit hammered, and how do you see that forward? No.
Yeah. Well, it was basically the beginning of 2021, I guess, not 2020, 2020. And I'd spent, 80% of my adult life being an entrepreneur with, again, the 3 companies I mentioned. And for the first time, we were doing an M&A with Letgo. We were merging with a competitor. I was going to stay on the board, but no more managerial responsibility. So for the first time since 1999, I wasn't going to be a CEO. And I found that extremely attractive. I was a bit tired, so I was planning on, doing all kinds of things that had been hard to do before. I planned on, a very long trip to Greece. I love Greece. I was going to say, 4 months. Some training in, some executive training in Harvard or Stanford, and I was looking at both. Writing some things, whatever. I had a year and a half planned with just very relaxed stuff. And, basically, long story short, the second I'm going to start this great time, COVID arrived. And so, catastrophe, we couldn't even travel, everything required traveling. So, I was stuck in like all of us. And then, after a couple of weeks, initially I thought this was going to be super fast. It wasn't. And so, when I realized this was going to take long, I started thinking, what can I do? And a banker from New York called and said, listen, there's this financial technology called SPAC, and it's good because, sponsors who have a history can raise money on the stock exchange and NASDAQ, and with that money they can invest it in a private company, and then the private company merges with a public company, and you keep a chunk of the joint entity, and it's relaxed. You don't have to. It's not full time, and you can add a lot of value, and everybody's very happy. And you have to. And I said, listen, you're not going to fool me. I've been around enough. Being CEO of a sophisticated Wall Street thing, for sure, it's not going to be relaxed. I'm not going to do that. But then another few weeks happened, and we're still stuck in COVID. And the guy calls back again, and finally say, okay, let's give it a try. And I'm very happy I did because, fast forward, we created Alpha Capital with my partner Rafael Steinhauser, ex-CEO of Qualcomm, Cisco, and Nortel for Latin America. Super guy. And we realized that there was a gap in late-stage financing for ventures in Latin America. There was a relatively covered early stage, Series A, Bs, kind of okay. Tiger had come in, SoftBank was around, Naspers process. Things were happening. There were big guys spending lots of money, but very late stage, pre-IPO, there was still not a lot. And we thought that was the difference. That explained the difference, even because we had lots of startups in the region, but not many IPOs in the US.
Yeah, and we shall see what happens with that. No, I still think there is quite a bit of uncertainty, but I think long term probably it's going to come back.
Yeah, we are convinced that this makes sense, and even though today we already announced the target we invested in. It's called Semantics. It's a company from Sao Paulo, super cool company. And we plan on de-SPACing in the next few weeks. We're discussing with the SEC the timing, but it's going to happen imminently. And we're contrarian, so we're planning on doing Alpha 2. In a moment where everybody's running away from SPACs, we actually will plan on doing a second SPAC after that.
So there's value of being contrarian.
Yeah. I mean, I think it's great being contrarian. But you've been an investor in multiple of these cycles, and you are a very avid investor today, even though today, some people are very worried. I mean, how do you see the future as an investor, and what would you share with the...
Yeah, we're going to have to wrap it up very, very soon because we are on time. But just to share a couple of quick things. As an investor, I think there is a lot of interesting things happen. The public markets corrected dramatically. Generally, public markets react much faster than the private markets. So, we saw a very strong correction of the public markets that is starting to reflect, especially on the late stage of the private markets. Now, there is a lot of capital available. And what starts to happen right now is that companies are thinking about, I need to get funded, I need to live longer. So people are going to start to raise what I think are extensions of funding for their businesses, probably at less higher terms, but at the earlier stages for sure, because they're going to be raising less capital. No? So I think there is going to be a tendency of the earlier stage businesses to raise slightly smaller rounds. The late stage companies are certainly going to correct their valuations into multiples that are much more reasonable, and that's itself an area of opportunity. No? I mean, I think that there's being movement from one side to the other, and it's an area of opportunity. So being an investor today is, I think, a great time, especially if you have money, because the type of opportunities that we're going to see are going to come along. So thank you, Alec. It's been a pleasure. Thank you, everyone.
I hope it was useful.
Thank you.